Good morning, everyone, and happy Thursday. Glad you're all here and made it in. So got a lot to cover today. We've got Jeff back in the room, which is great. Going to be taking you through the pre-market routine again. Got a lot to cover today and want to tie in some of what we talked about yesterday as far as our zones panning out today and what we can look to expect from in the markets right now. If you've been watching, we've gotten a little bit of a pullback in the markets due to that volatility from some of the reports coming out. Today was actually the heavier day as far as reports, so a little bit more volatility to be expected, but overall want to continue with the overall trend in the markets, which is to the upside. So want to maintain still a more bullish perspective overall and for the long term. Good morning, Liz. Morning, Angelo. Oh, and if everyone could mute their microphones, that would be great. Awesome. Thanks, Jeff. So starting off with the news, purpose of this is just to get that big picture perspective of what's going on with the economy, what everyone else is looking at, and basing their trading decisions off of what's going on in the news. So we want to keep that in mind as far as having that perspective of what everyone else is seeing, and then we can use that to tie it into some of our other odds enhancers that we're looking at. So starting off with the news, pretty much agree with what they're putting out there, and sometimes you can take it where you might think the media is portraying one way and you might have a different opinion. But yesterday and today, pretty much agree with what they're saying. Overall, more bullish news out there. As you can see, just taking a look at the main headers to get what everyone else is seeing is really all you need. If you want to read the full articles, you can definitely do that, but definitely just look at the main articles, what's in bold, to get that good overall perspective. So as you can see, some of the main articles on Market Watch, we have an above average growth story is about to unfold. European stocks rise with travel stocks gaining. A lot of bullish news coming out there. And even though we've seen this pullback in the markets, seeing this more as an opportunity to buy the dip and then ride this out to the upside. Going over to Yahoo Finance as well, similar to Market Watch as far as getting that bullish perspective. Stocks look to extend win streak as earnings impress. So when we get these pullbacks in the markets, it's important to not make trading decisions based off of fear. It's more to understand what the overall trend is and how we can participate and actually use these pullbacks to our advantage. So that's what I'm seeing here as far as the news. Overall bullish and agreeing with that perspective as well as far as wanting to participate in those longer term bullish trades. So going over to Econo Day, as I mentioned, today was the heavier day as far as reports. We started off earlier this week and not a whole lot going on, but as you notice that at 8:30 a.m. Eastern time, we had a few reports that came out that caused that spike of volatility in the markets. Had jobless claims come out at 8:30 a.m. Eastern time. And if you want to get the data, just click on it. Especially the ones with the red dots on them are going to be the market moving indicators. Definitely ones to keep an eye on. And as we can see here with jobless claims, the consensus range was between 320 to 364. Jobless claims, the actual value that came out is 419. So higher than expected for today, causing a little bit of volatility in the markets. So the importance of looking at the reports each day is to understand that it can cause this volatility and it's important to be prepared for it versus not looking at it at all. Understanding when these reports come out, you can be a bit more prepared. So jobless claims, 8:30 a.m. Eastern time. We also have existing home sales at 10 a.m. Eastern time, another market moving indicator as far as one that can potentially cause some volatility. So we'll keep an eye on that one as well. And then of course we have the nat gas report at 10:30 a.m. Eastern time. So as I've mentioned before, I'm going to ask you guys, but who knows, I think I gave this one away yesterday, but how many ticks as far as price movement do we look for the nat gas report on average? We're similar to oil. It didn't really happen yesterday where we were expecting that 55 tick move to the upside or downside. Good work, Taylor. Yes, 36 ticks. So nat gas, you know, we're going to be expecting that 36 price movement, average volatility swing that we've tested time and time again. But it's also good to do this documentation and research so that you can trust it and verify it yourself. So we'll look for that volatility swing. We'll look for our supply zones, for our demand zones, and then pan our trades and plan them out accordingly. So 36, keep that in mind. If you forget it, I know I used to get those confused and backwards as well. Good to write them down and then keep track of them moving forward. You can always write those numbers on your charts or draw out your measuring sticks for the 36 tick move and then just move it week over week so that you can stay on top of that. So a couple that we want to keep an eye on for today, those are the main ones, and then as well as Fed balance sheet at 4:30 p.m. Eastern time. So today, a busy day, can expect, again, more volatility in the markets as all these reports are coming out. So need to be prepared for it. Could cause volatility as far as price dropping into our demand zones, and that could be good for us to participate in some longer term setup trades. Good morning, Gallo. Okay, so going over, and then one more thing that I want to just point out is that as we saw that price drop in the markets on the S&P, I was taking a look at the trend before, and let me refresh this so you guys can actually see it. But in the pre-market, we're seeing the trend all the way up above 2.67. So we saw that volatility happen that came into the markets. Price has started to drop on the indexes, and now we're seeing the trend spike up to 2.5 in the pre-market. So very important to keep an eye on this, especially in the pre-market. If we are seeing the markets dropping, we want to get an understanding of when are the institutions going to be stepping in and buying up the market. So knowing that and seeing that the trend is high when the markets are going down, that's where we're seeing that inverse correlation, and we can look to participate in our long-term trade. There we go. Sorry about that. So yes, with that inverse correlation with the trend and the markets, seeing the spike up in the trend, if we do see the markets continue to drop, even more so, we're going to be keeping an eye on our demand zones. So that is the Market Watch, Yahoo Finance, economic reports, and then keeping an eye on the trend. So going over to the charts for the day. Good morning, Daniel. We can see that we did break outside the prior session's range. So if you're new here, as I mentioned yesterday, these blue lines are going to be showing the prior session's range. So the solid blue lines are going to be marking the prior session's high and the prior session's low to get that range as far as where the sellers came in and where the buyers came in. If price breaks above that range, we're going to be looking for more trending opportunities to the upside, versus if we break out to the downside, going to be looking for more trending opportunities to the downside. As you can see here, we did break the prior session's high, getting a bit of a pullback, as I mentioned, due to that volatility with the reports coming out today, but not to cause necessarily fear right now. Looking for us to participate in some demand zones or potentially some breakout trades that we can use to continue this move to the upside. So again, breaking above that high, looking for more trending opportunities. The odds are going to be in our favor even more versus when we're inside the prior day's trading range. That's where we typically see choppier market conditions. It can be harder to get in and out of trades, but these market conditions where we're outside the prior day's trading range typically works in our favor a bit more. So S&P, I do have a 4-minute demand zone. As I mentioned before, it's important to look for your I guess fractals, you could say, as far as different pictures you can see on different time frames. We want to give them more importance on the higher time frames. So starting off the pre-market routine, as you guys know, always start off with the daily chart to get that understanding of where more of the institutional activity is coming into play. So here we can see this wick over wick, which typically means that's where the imbalance of orders is. Like to look in that area for some zones to see if there is the creation of a new zone within that wick over wick. And because it's on a higher time frame, going to give this some more credibility as far as a potential zone being in that area. So 4-minute demand zone, I'll show you guys this one on the S&P. And again, looking for a pullback in the context of this overall uptrend would be a good opportunity. Also with the markets dropping and the trend going to the upside, we can see that there is some buying coming into play right now. So this one's going to be a bit lower. possibly one in here. This is the one that I'm looking at, since after we had this huge drop yesterday, we could see this was a rally-based rally towards the origin of this move to the upside. So 4-minute demand zone down here. You can see here is where the sellers came in, that pushed price down. And then we have a leg in, base, leg out, and base here for our 4-minute demand zone. So entry on this one is going to be at 4324.75. And then our stop is going to be at the distal line, which is 4320.75. So 4-minute demand zone down there. As you can see, we had, again, this big drop yesterday, and then looking for that candle formation near or at the origin of that move to the upside. So 4-minute demand down there. And as I mentioned before, that was in that wick over wick area that we saw, where typically we can find an imbalance of orders where the sellers are mixed with the buyers and one is trying to take control over the other one. So here is where the buyers stepped in, pushed price to the upside. So looking for potentially to be some unfilled orders down here. So S&P getting that nice drop, nothing in the way right now as far as no unfilled orders here. So price will continue to drop until it finds where those unfilled orders are at. So that's the 4-minute zone down there. And again, the purpose as far as looking for the demand zone, due to the fact that we want to be buying in demand in the context of this overall uptrend and using our other odds enhancers in our favor. That's the main one, keeping an eye on the S&P. Going over to the NASDAQ, as you can see, similar picture here as far as breaking outside the prior day's trading range. So I'll zoom in a bit more so you guys can see more clearly. But yesterday we actually closed right at the high point. So here was the prior session's high, the prior session's low. And as you can see, we did break out to the upside, actually shot right into our supply zone. If any of you guys took that trade, let me know. But this is one that we had set up yesterday. So this one hit today, getting a bit of a pullback right now, looking for price to come into some of our demand zones and then possibly continue this move to the upside. Made 500 on 2 micros yesterday. Awesome, David. Good job. Was that on the NASDAQ? That one I still had running, actually. Awesome. Yeah, I think, yeah, I just left that trade on, and I mean, up $2,000 if you would have just took it and let it run to the upside. But NASDAQ was a great trade. So we took it long all the way up to our supply zone, hitting supply, now looking for that pullback into a demand zone before a continuation of this move to the upside. So in the 3-minute, or actually hit the 3-minute supply zone, as I mentioned, looking for that pullback move into our demand zones. Got 2 on top of each other. As you can see, similar to the S&P, where we do have that wick over wick area. So as far as location, looking at these fractals on the high time frames is very important as far as seeing where more of the players are stepping in. So got 2 zones in that area. We do get that pullback. First zone I have is on a 5-minute time frame. So I'm going to go down to this one. Thanks, Jeff. So coming down, so that's the 3-minute zone that we had up there. And now looking down here again, where we can see the sellers stepping in several times, at least 3 is going to be the best as far as seeing where that battle was happening and then finding the zone just below that area. So here is where price was rallying, coming up, sellers stepped in, push price down again, a 3rd time, and then price ultimately went up because there were no more sellers at that point. As you can see, there's actually a zone in here that got retested already. So I'm looking a little bit lower as far as the origin of this move to the upside. So on this 5-minute time frame, if we do get that pullback on the NASDAQ, looking here, we got our zone, our leg base on the NASDAQ. Entry is going to be at 14,755.25. And then our stop is going to be at the distal line at 14,735. So 5-minute demand zone there, again, below this resistance area. This zone already tested, as we can see, and got a strong move out of there. So looking down and to the left at that lower zone. And going down even lower to the origin of this move to the upside, we have our 15-minute time demand zone as well. So going to go up to the 15-minute. Textbook formation, exactly, yeah, you want it to be so textbook as far as what you're looking for and not deviate from it, and then you're gonna have the best chances of better quality zones. So looking here, again, you can see looking over to the left, we had the seller stepping in here and here as well. This is our 5-minute zone here. And then at the origin of this move to the upside, we do have another 15-minute demand zone. So zooming in, here is our candle formation. Our entry is going to be at 14,702. And then our stop is going to be at the distal line at 14,668.25. So 2 zones there, waiting for that pullback. In the meanwhile, nothing really in the way. This is going to be that pocket of points until we get back down to where we saw the seller stepping in. As you can see, this is where price was going sideways as there were sellers pushing price down several times. So we're looking at those origins of these moves where we have strong impulse moves to the upside below that area where the sellers were at. So 2 nearby zones to keep an eye on the NASDAQ. And then I'll show you actually the 3-minute zone that's working out right now, just so you can see that picture as far as trade setups that we set up and then seeing how they actually work out and why they work out. So going over here, we could see that this is where we saw the buyers coming into play once, twice, 3 times, even more. I believe to the left-hand side, we could see all the buyers were coming in at this price range between 14,860 and 14,880 was that average price range where the buyers were stepping in. Ultimately, we had a strong move down, a pullback, and then this was the origin of this move to the downside. So looking at that, this was the zone we had marked on the 3-minute time frame. Same picture as far as the leg base, leg out, base formation there above where the buyers were stepping in, and we had this strong move down. So currently respecting that supply zone, but looking at our demand zones to get that pullback move to continue this overall trend to the upside. That's the NASDAQ right now. And again, those are the main ones that we're looking at as far as our demand zones in that key area right there. Going over to the Russell, again, all the indexes pretty correlated as far as breaking out to the upside and now getting these pullbacks. So I'm sure a lot of people took the breakout and now they're getting stopped out as prices coming back down. We want to use that to our advantage to understand when we want to participate and actually start buying up these markets. So 2 zones down here as well at the origin of this move that took out all these prior pivot highs. Got 2 15-minute demand zones. And again, similar to all the other indexes, looking to buy since we are breaking out to the upside of the prior day's trading range. So looking for more of those trending opportunities and going to be looking at our demand zones. So here we can see where the sellers were stepping in. Here's where we had this strong move to the upside. 15-minute time frame here on the Russell. Our entry is going to be at 2208.3. And then our stop is going to be at the distal line at 2200.8. You can see that's right in that round number area where typically we see a lot of the institutions getting their orders filled at. So always look at the round numbers as well as an additional odds enhancer. So 15-minute demand zone there, and actually another 15-minute demand zone down here as Maddie mentioned, looking for those textbook formations as far as what we're looking for and stacking as many odds in our favor as possible, seeing where we have the 3 touches. We have 1, 2, 3 times where the seller stepped in, and then looking for our zone just below with that candle formation. So 15-minute time frame here. We have our leg in, 2 base candles, leg out, and base candle. And this is going to be at the origin of this strong move that takes out these prior pivot highs. So on the Russell, our entry is going to be at 2189.5. And then our stop is going to be at the distal line, which is 2184.8. So 2 zones on the Russell to keep an eye on. And as you can see, no real demand in the meanwhile, so waiting for price to drop into one of our demand zones in the quality locations where we can look to take advantage of our buying opportunities. And lastly, going over to the Dow on the daily chart, similar picture, breaking out to the upside. So looking for a pullback into our demand zone. Here again is that wick over wick area, similar to all the other indexes. This zone is going to be on a 5-minute time frame. So 5-minute going down and to the left. You can see here's where we had the origin of this strong move to the upside. Here's where we saw the sellers stepping in over to the left, where price tried to rally and keep going, but then we found some sellers here that pushed price down again, a 3rd time, causing this big drop. So looking at the origin of that move that broke out all those prior pivot highs and continued this move to the upside. So 5-minute demand zone, this one's going to be a bit wider, but I had to go all the way to a 5-minute to actually get it. If you want, if it's too wide, you can always do a confirmation entry, whereas price is coming into the zone. You can take it as price is leaving the zone, or if it's not in your trading plan, you definitely don't have to take the wider zones, just based off of your trading plan. But this zone right here, 5-minute time frame entry is going to be at 34,529. And then our stop is going to be at the distal at 34,457. So that's the Dow. As you can see, just a big drop, looking for where the demand is and looking here at the origin of this strong move to the upside. So now we've done all the indexes. Next is just to look at the indexes, compare all of them together and see if they're all correlated as far as moving in the same direction, what the last 5 to 10 candles look like on each of the charts, just to see if they're all correlated. Typically, the market conditions are a lot better for us when they are, and if we see a disconnect with the indexes, typically that's where we see choppier market conditions. So taking a look at the past 5 or 10 candles, you can see they all actually look pretty similar, so good situation for us. We saw this drop on most of the indexes and now getting a bounce off of them. So similar picture where we have this drop and a bounce, just looking at the last 5 or so candles. Drop here, drop on the NASDAQ, same Russell, pretty similar across the board with the indexes. So this is one odds enhancer that we can use to our advantage, good for us. The other odds enhancer as far as looking at the indexes is we want to look at the indexes and then see if bonds are moving in the opposite direction. So that's one of the other workspaces that we look at, just to compare that the indexes, 1, are all correlated, and that 2, we see bonds inversely correlated and moving in the opposite direction. Oh wait, Danielle, Kaitlyn, I have a question regarding that YM zone they have on the 5-minute. If you go to a 4-minute, you have the same drop, but a smaller base leg base. Let's check that out real quick. Before I do that, so just to see, we see the indexes dropping, and we see bonds going up. Actually, that last pullback where the indexes are getting that bounce, bonds are going down. So we're seeing that inverse correlation between the two. So good to keep in mind here as far as wanting to see bonds going in the opposite direction as the indexes. So I'll go back to the Dow real quick. So the 5-minute, let's see, if you go to a 4-minute, you have the same drop but a smaller base leg base. Okay, if that's smaller than the zone I have, can definitely use that because I know it's a wider zone. Let's see. Leg base. Aha. You guys see this one? So coming down here, we have our leg candle, our base, leg out, base candle. Can actually make that very small. So as far as reducing your risk, good find on that one, Daniel. I obviously didn't go to the 4-minute, but that one makes it a lot smaller. So I'm gonna change this one to a 4-minute. Always good, as Daniel did, to, if your zone is too big, keep going down to the smaller time frames and see if you can refine it, getting that right picture and continue to reduce your risk. So going over to the internals, just want to keep an eye on these. As I mentioned before, I was looking at the trend in the pre-market as we saw these indexes starting to get that nice pullback, and we're seeing the trend move to the upside in the pre-market. So seeing that correlation is what we want to see as far as the indexes going down and the trend going up to show that the institutional buying is coming into play. So we'll keep an eye on this one as far as if the markets continue to drop during the regular trading session. We'll want to see if the trend continues to go higher, indicative that there's even more buying coming into play. We'll keep an eye on the tick as well to see if it can reach one of these extreme areas, where if we reach the extreme high point, looking for more of our shorting opportunities in our supply zones, versus if we get an extreme low point, going to be looking for our demand zones. So closed in the middle of the no trade zone, advancing issues over declining issues. You can see we're right at the high point as far as advancing issues near that extreme area. So going to be looking again for more of those short opportunities. And then with the VIX slowly dropping as we have seen the markets continue to rally, we'll see what happens with this pullback and if we can see potentially some more volatility in the markets until price reaches our demand zones. And lastly, going over to the pre-market indicator, definitely an important one as far as seeing if we're gapping up or gapping down in the pre-market. So you want to check this one 1 hour before the regular trading session begins to see if we're gapping up, going to be indicative of more upticks and up volume in the pre-market, versus if we gap down, then there's going to be more downticks and down volume in the pre-market. So here we can see that we gapped up, going to be more bullish sentiment in the markets. A lot of traders going to be looking at this, going to be feeling more bullish, as we're seeing in the pre-market, obviously more upticks and up volume. So just another piece of information and odds enhancer that we can use in our favor. Where should our target be? On the Dow, Maddie? Or let's see. Yeah, I don't know if any of you guys are in Nat Gas too. We have the Nat Gas report coming out today as well. So keeping an eye on that one. We just hit our supply zone. Target, yeah, which on the NQ? Yeah, so target as far as looking at your opposing zone to find the target, I believe my first demand zone's on the 15-minute time frame. So currently in supply right now, if you took that short, your opposing zone just before it is going to be your target. So if you're taking it short, looking for a target down here just before your opposing demand zone, where there's going to be all those unfilled orders, looking above that area at approximately 14,760 would be your target if you're on the short side. And then if price comes back down to demand, would want it to clear the supply zone up here. Could use that as your potential target if you're taking it long, just to get out before where the sellers are stepping in right now. I believe that is it for today. I'll pass it over to Jeff and we'll get started with some zones. Thank you, guys.
All right. Good job, Kaitlyn. Right as we are starting out, let me get my screens up here. We've got a lot of little lessons to go over today, uh, a lot of really cool stuff that's coming out. I mean, today is going to be a good little trading day, but there's tons of little lessons as we are putting things together, or as I was putting things together here. Um, I may not be able to participate in all of those trades at the moment, uh, but we're going to do as many as we can. The trend was high in the pre-market, so we're anticipating a move to the upside short term as we're starting to look at the markets this morning. I'm a little reserved because the trend was so high. I'm not jumping in to the short trade just yet. We're allowing the markets to kind of tell us what they want to do. A couple of things on the last trade date strategy that Kaitlyn and I have been working on is we have natural gas report, as Kaitlyn's mentioned, coming out. And the other thing to look at on that report that's coming out is we go out to the CME group and we bring up that natural gas. We see that the 28th, okay, so the 28th would make it roughly about Wednesday when we have that last trade date, okay? So just as a glimpse of that last trade date type strategy here is taking a quick look at the crude oil, okay? This was the last trade date, okay? Price dropped down on the last, right towards the beginning of the last trade date, and we've had a nice move to the upside, not only on this one, but on wheat and some of the other ones that I've been observing, okay? So we have natural gas coming out and just coming out to a little larger time frame. Notice the topping pattern up here, okay? And with the natural gas futures contract last trade date coming up, okay, we still have a few days where the possibility of price moving down into that last trade date, okay? And as we start looking at that projected move down, looking to the left-hand side of the chart, we can start to eyeball a couple of areas that we may have interest in. You know, should the price pull back to that last trade date on the 28th, then we'd be looking for price to move higher. Now, this is not only on natural gas, which we have potentially the kicker today with the economic report coming out. So a nice little topping pattern possibility here, okay? Now, I've been doing this trade over here. This is, we entered on the zone at roughly about that 65.19 area on the mini contract of the crude oil, just one contract, and we've held that over the next couple of days up. One thing that in observation is that we have seen that the move into the last trade date, and just quickly look at a couple of the how much time that took as price dropped into there. And it was about 4 days, okay? So all things being equal, if we're looking at 4 days going into that, okay, bring up our calendar. So we got today, tomorrow, and then we got Monday and Tuesday, with the last trade day being on Wednesday. Imagine that, okay? So as we put this together, we're looking for a long opportunity on the 28th on natural gas as last trade day comes into play. We're also looking for a move down into the 28th. So cool stuff coming up. Kaitlyn and I are putting together some additional strategies as we get started doing some of the things on our own out here. And we have some classes that we will be letting everybody know about in next week, once we get everything kind of solid and put into play, okay? So some incredible opportunities and some incredible strategies coming up. The stock picks today, use an entry point, okay? I want to go over a couple of these I bring up my list. So we also have gold. I got to quit jumping around here. Let me get into a couple of trades. We still anticipate the market to go up. Okay. But right now, things are selling off. Stock Traders Almanac is calling for the next 2 days to be bearish. Okay. Now, we haven't committed to a downtrend yet, even on the short-term charts, as I start to refresh. Now, the software you see me use is Entry Point. You can let us know if you have an interest in coming to a demo of Entry Point, and then we'll schedule that out to where everybody can get a nice little live demonstration of how to use Entry Point, but also to evaluate it to see if it's potentially something that you want to incorporate as part of your tools. Okay. Now, Entry Point is trend following. It's not supply and demand. Okay. And we'll expand more on that if you, and we'll send out some invites as we schedule that out. Okay. Right now, the markets are a little mixed. We do have the S&P and the Russell showing the level 5 to the downside. Actually, the Dow, S&P, and Russell showing level 5 to the downside. And the NASDAQ is moving higher. So let's take a quick look at the NASDAQ. Maybe our opportunity. There we go. That's what I was waiting for, is that little spike. I think NASDAQ needs an exhaustion move before starting to move down. Okay. All right. Hi, Dale. Can you go ahead and mute when you get a chance? Or Kaitlyn, can you do that since you're still the host? Thanks. All right, so we do have a supply zone, 14,891, 14,906, okay, on the NASDAQ. So breaking the Globex high, that makes this a bull trap area as a strategy, okay? So we're kind of looking at that 1489, 14,891, 14,906. This very strong push up here is just going to, I mean, we could overshoot this simply because of, you know, squeezing out the short traders, okay? As far as the Dow approaching that demand zone, yeehaw, all right, 34,543, and then we got 34,510, okay? So when price is approaching, I'm sorry, go ahead.
Oh, keep an eye on the Russell too. Just wanted to point that out because we're approaching the demand zone on the Russell too.
Beautiful. And do you want to share your screen just a moment? Show you that?
Oh, you're good. I got the same zone. So just want to keep an eye on both of them.
All right. Imagine that, everybody. We have the same zone. Kaitlyn's doing really well at this. Thanks for giving me the alert. Sometimes I'm on my soapbox talking about something else and miss the really good opportunities. We're still about 5 minutes away from that intersection, and that's why I'm watching that the clock right about that 9:45 Eastern time. We'll look for price to intersect with that demand zone. Also on the Dow, we also need to keep an eye on this combination of zones. The combination of zones, a drop-based rally followed by rally-based rally, okay, kind of picture. Often price will get the bigger turn at the lower zone. Along with that, Kaitlyn pointed out a lot of the economic reports coming out today, and we have a whole bunch of them. Key things, housing numbers, leading indicators, 10 o'clock, 85% of the time, price will change direction at 10 o'clock, plus or minus a couple of minutes. Now, when we have the red dots on here, these are market moving indicators, okay? So the legend down at the bottom basically implies that the emphasis on the red dots is it does cause the market to react. Tomorrow we have the PMI flash, okay? All sorts of good things going on, okay? In that spirit here, okay, and we've got the gold. Okay, as much as I'm looking for it to move higher, gold last trade date is on the 28th, as well as natural gas. Okay, so as much as I want to see price on gold go up, I think over the next 3 to 4 days, we're going to see gold go down as kind of a, how do you want to put it? It's something that happens around the contract rollover, something that we need to be aware of. The last trade date has, you're not going to hear about this anywhere else. So within our group right now, of all of our participants, let's all collectively kind of work and refine this trade plan. As you can see, one mini lot on crude oil and a nice move up can produce a pretty sizable gain. Okay, so from the last trade day, moving up approximately 4 days as well. Okay, we're only 2 days into this. We could see price moving up into that supply and maybe even beyond that. Okay, my current stop on this is going to be about 69.84 as I just adjust price up. Nothing has been violated. We're still in that uptrend. The smaller time frame, we can learn to splice in to a move like this, having a bigger directional play. On the same spirit of this, I didn't get to play a lot of these this morning. I'll be a little bit better organized, a little more proactive on this. But when we saw the trend, $TRIN, as we come back over to the, and we can see that the trend is getting high. It's above 2, okay? So any drop into a demand zone is going to be a buying opportunity short term, okay? Now, much of us can get the day done early when we start looking at stocks that are gapping down and we look at the total volume, okay? So from the list, I'm just going out to a 240-minute chart. I have a couple of these examples posted, okay? Stocks that are gapping down into the origin of a strong move up, okay, in a zone, okay? Now, these have been incredible morning trades, okay? And on these morning trades, we will, Kaitlyn and I have kind of discussed, maybe we need to start 15, 20 minutes early so we can get the pre-market routine done, but then also have about 15, 20 minutes where we can really set some of these stock trades up, which is another great little strategy. Trend is high and stocks gapping down into a demand zone in the pre-market, okay? So I had SHLX, I had TXN, okay? Texas Instruments, let's drop that back down to smaller time frame. Texas Instruments still working here. See the stock gap down into a demand zone at the origin of a strong move up. Okay, so we're still expecting a bounce out of that one. COLD in the pre-market had good volume. Look at that, nice little bounce out of that demand zone. We're looking at about a 60-cent move. So taking 1,000 shares, that'll be about $600 pop on that. Okay. GO. Okay, another opportunity. And as we use a little bit of the things that Kaitlyn and I are going to be covering and teaching next week, is as we start to look at these pictures, a novice gap or a gap down into the origin of a very strong move up. See, what we're exposing in the pre-market is where the banks and institutions have unfilled orders. The more times that we look at this picture on a price chart, we see the reaction, okay? First test was proximal line entry. Second one came in, did a zone entry. Therefore, when we look back at the zone, there will be some clues, a gap and a stronger move away from the proximal versus a distal, okay? We can start to look at that zone to be used twice and should be expecting that bounce in the right at the session open. It's not necessarily something you buy and hold on to. We're just looking for some active income type trades. The other one was UL. Sorry, I need to get my chat up here. Where'd my chat go? There it is. Yeah, Kaitlyn's been answering the questions, but if I need to go back over there, she'll let me know. All right, we also have UL still down in the zone, but the fact is that it gapped down into a zone, okay? And we need to examine what that picture looks like, okay? And as we do, we can then make some good decisions, whether we're going to take it long at this point or we're going to wait for a better zone in a better quality location, okay? A lot of great things on this, okay? TCON, TCON, okay, TCON, Tricon Pharmaceutical, gap down. This one's a really cheap one, $3.77. Let's come out to a little larger time frame, see what that picture looks like. Okay, now this is not a place to look for an opportunity to go long. I wanted to use this as an example. Okay, now this is relatively a newer company, but this zone is located in the wrong location, so where banks and institutions would be stepping in. Okay, remember, we always want to have that area to the left-hand side of the chart where we have that very strong move in price away from that point of imbalance, okay? In fact, we gap below that. We do have a candle formation on the smaller time frames, but this zone is in the, this price right now is kind of in the wrong location. Great. Internals, trend is still high, time to buy. We're looking at the VIX. VIX has pulled back. On the VIX, okay, the fear is coming, well, getting low. So we have that 17.03, $16 range. As we are expecting the markets to pull back, we need to be aware that, well, as they are going up, we want to look for that opportunity. And if they pull back later on this session, then we'll see that place where we can take a trade on the VXX or the VIX while buying some call options for Monday, Tuesday's move up. Advancing issues over declining issues are on the bearish side. The tick is right in the middle as expected. No buy programs, no sell programs have kicked in just yet. Gold, still, we talked about that earlier, looking for that move down. And I need my adjusted stop, 69.84 on that. Still expecting price of crude oil to possibly go back up. We still have some of these upper zones, but always managing the risk and wanting to capture that. See, one of the big motivators right now is that at the high point, this was up 2,900 bucks, okay, which is just this high right here, okay? Now that felt pretty good for a couple of days in a trade. Anybody else like that? Okay, me also. So it was like the P&L is motivating me more than letting the trade work out, okay? As many of us have done before. All right, well, that supply zone has been holding, and we're looking for the opposing demand. We're 10 minutes away from the top of the hour where we have some economic reports coming out. And we expect that 10 o'clock reversal. IBM and Goldman Sachs leaning to the bearish side, okay? And our larger time frames, okay, the Dow went into a zone, but I'm looking more for that 34,824 area, kind of a zone entry. On the NASDAQ, looking for that 14,900, nice round number. Okay, on the bigger picture, 14,935. The target will be almost 200 points move to the downside, okay? Would be more if this starts to make a topping pattern, okay? Notice the beginning of the uptrend, and we would flip this over to look for the beginning of a down move, okay? So what we have currently on the price chart is this move up, the move down, and now price coming back up into that 14,900 area, okay? A nice little round number. People will become very bullish and start to hope that the market's going to take that area out. Whereas supply and demand traders are a little more cautious at this point. And what we are looking for is price to move back down. First target, 14,704. Second target, 14,406. Now that could be a pretty decent move to the downside as we're looking at target 1 and target 2. A little bit bigger picture perspective, but pay attention to what we post out on Twitter, and I'll start doing some forecasting to the right side of the chart as well. S&P also doing a high tight base at the moment. Now, high tight base just simply means based on this last move up here, I'm very cautious that price could continue to move higher unless we start closing below that 23.6% retracement. Right now we're below it, price is below it, okay? And if it holds, then I'm gonna expect that 43.66 coming into that zone, 66 by 85 range, okay? If it starts to break down, then it's not gonna continue to the upside, okay? We have to be very careful with the high tight base, and as much as that we still may have some whipsaw to the upside. And as we look at previous tops, we can see that there's always, for the most part, a little tail to the upside into a zone, and then we get the sell-off, okay? That's a little bigger picture perspective. 8 minutes for the intersection, okay? Looking for price to come in. Another thing that I'll caution you on is I have a demand zone right here, but that demand zone, you can see the low of the session, 43.45, I would have to enter into uncharted territory, meaning I've placed that order to go long at that 43.43, but it's at a new low where there's really no volume to see right there. So I'm going to wait for price to intersect with that, just maybe a moment or two just after the economic reports come out before I take a poke at that long, okay? So we do have economic reports, 10 o'clock reversal, all of them starting to compile right in this range, okay? Yeah, NASDAQ hit that. Anybody grab that one? There's a little more risk, but a nice little pullback, okay? We're looking at about 30-point pullback on that. Nice job, Daniel. Got to do the happy dance, okay? Dow, okay, we're right in the middle of the zone. Still waiting for that 10 o'clock. But I will tell you that the zone down here, 34.82, is a little bit more favored, okay? So with the economic reports coming out, okay, this is where I expect more of a trend to change. And also the one below, I would expect more of the trend change to happen at these two relatively to the one up above, looking for just a bounce. Russell going deep in the zone, okay? Let's tighten that up just a little bit, okay? And let's look a little further to the left, okay? I seem to have some good evidence of a looking left, see where to move out, took out the supply, that's our point of imbalance. We have a nice little zone down below. I kind of refined it, but I will make you aware that there's another zone right close, kind of in the same area. So if you don't want to take the heat, let's look for that 2190 on the Russell before we start to look to go long, okay? We're still 5 minutes away from the 10 o'clock reversal. I hope everybody's had a chance to register for next week. Kaitlyn and I are putting together a lot of effort and hard work into what we're doing next week as far as our kind of our debut coming out using a little bit more of the Zoom application. By the way, how do you guys like the Zoom better than what we had been using on TikToker? Any feedback? Yeah, I think I like it too. Any feedback or suggestions, please let us know, okay? All right, so let's take a quick look back out at our natural gas. Natural gas still holding the top up here, okay? And we still have the 28th before we start having that last trade day, okay? Gold, not getting much of a move off of the demand zone. Again, we're looking for gold to go down over the next couple of days. And this is based off of some of our last trade day. Let's see, what else do I have? The internals, yeah, we're still pretty high on the trend. So the 10 o'clock reversal is anticipated. The information they're putting out, okay, would imply that the market's going to move up on that 10 o'clock time frame, okay? But again, we have some risk. NASDAQ may shoot a little higher. Bull trap work for a nice little trade opportunity. Let's get that one out of the way. And we'll kind of get the bull trap strategy set over on the side. And there's that 14,944. We also have that whole range, that 14,900 range, someplace to watch for, especially if we do get that pop on the housing numbers and such coming out, okay? Let's see. Dashboard. Now, what I want you also to notice is that we got bonds going up, and we have the NASDAQ going up, and we have S&P and that Dow going down. We have that mixed market. As Kaitlyn has been doing a fantastic job doing the pre-market routine, you notice that we keep going through the same things just to get an idea. We use the dashboard, we use the internals, we start looking at additional pieces of information to help us understand what the traffic conditions are outside of just the price chart that we're looking at. And we're using that time element as well. All right, NASDAQ still pushing up, Dow. Okay. Now I'm gonna go out and take a little extra risk on this, and I'm not gonna per se, well, I'll manage the risk too, but I'm looking for that 34,482 area. That's what I'm willing to put risk on, 482. Okay, so putting 3 contracts on there, taking my upside, and I will adjust my stop to just below the distal line, a couple of ticks, okay, and look to go long at that lower zone to stay in for a little bit longer, okay. Now, the 34,543 area, as we look at the top of the hour, the economic reports, and up to about 3 minutes after the top of the hour, I'll look for price to come into the zone and then transition and come back out. For the Russell, let's see if we can capture a long trade, 2008. This will be short term, 0830. And we'll just look for a short term gain on that. Not going to give this much risk.
Order filled.
Probably about 205 or so. About $50. Okay, I'm just trading a couple of micros. Not looking to stay in very long. Was this your zone, Kaitlyn?
Yes, exactly.
Awesome. Do you have a profit target you're looking at?
Opposing zone. Let me see.
Ooh.
Yeah, I have the same supplies you do, where we have that basing area and the supply zone above around 22.35.
Okay. All right, I'm going to take another stab at this. We still had a couple more minutes, so I'm going to come back in at 208.30. And in this one here, I'll make sure that I adjust my stop loss to the distal line where it should have gone in the first place. Just a little bit lower, okay? Thanks for that. Gold. Crude oil's just doing fine. Russell. Dow. Okay, not much of a reaction. NASDAQ. We did get a little pop higher. We're right into that 14,900 area, which was from our large time frame. Okay, coming over here. There we go. We're right into that range, basically between 900 and 935. Okay, that was our bigger time picture. So I'm also looking for that the 900 to the 935 area. We'll look for some opportunity right in this range. Quite a large zone. And we also have to be aware that the trend was higher, that the markets are ascending while the trend is high. You guys catch that? Trend is high, but the markets are going up. That's the wrong picture. We'll get a short-term bounce up, and then possibly the market to sell off, okay? That's a positive divergence versus a negative divergence. And when using the trend, we want to have that negative divergence, markets going down and the trend going higher for a best opportunity, okay? Wow, I really don't want to miss that one, but I still don't have the support from the equities that market is moving down, okay? All right, so I'm going to see if we got a high tide base forming. I just want to see price pop a little deeper into that 14,900, and then I'll look for a longer term play going short. S&P still kind of chopping in the middle. And we're starting to see, using the entry point software, these equity indexes are all mixed up. How do we know they're mixed up? Well, we have the market trend is not blue, and I mean, it's a different color, each one going up. Now, when we have our best trading opportunities and trend coming in, we see that everything is a level 5 blue, okay, which we call level 5, okay? Now, we can also see that if we choose to take trades now in this market condition, we don't have everything level 5 down nor level 5 up. And we see that the yellow is more congestion, and the magenta colors say, hey, something's about to change, okay? This is, trend following techniques help us stay in the trend and get that good price movement up here. It looks like the NQ still holding here, but I'll look for another test of that upper level before I start taking a trade short. All right. All right, so stocks are doing good. Let's see, what did I have for the futures? Australian dollar, a little bit bigger time frame. Okay, Aussie dollar just came is kind of hitting that, well, did hit that supply, okay? This is a little wider. Let's go down to a 60-minute chart, okay? But may not be done moving up, okay? If we pull back, we want to look for where we have the point of imbalance, and we want to look for that demand zone around that area where we have the point of imbalance. And another odds enhancer that you will see is that we have the leg base group of candles as price was leaving that higher time frame zone. Okay, when we start building new demand zones, as price starts making an uptrend, we want to look for the opportunity to participate in the pullbacks. Okay. British pound, the other day, we had a great little breakout trade. Okay, we had price breaking out of this range, that move out. I took the trade up into about this area, and again, looks like I left some on the table. That's all right. We're also waiting for that pullback on British pound. 1.3711, 1.3692. Supply up above, 1.3808, 1.3840. Okay. S&P pulling back. We've got to watch the time. We're about 6 minutes away from that intersection. NASDAQ. Come on, I want to get back up into that 900 area. The next opportunity I would have if I miss my supply zone up here in taking that trade would be to take the breakout. And the breakout would be just as price breaks that Globex low area or slightly below it. Okay, or sorry, slightly above it. Let's open this up. Slightly above, looking at that breakout, right about that 14,833. Right now, we don't have any down moves going on the equity indexes, so we're still waiting for price to move higher just a little bit. Maybe shake the tree on those short traders just one more time. Dow, we're still waiting. Russell did violate, even by a tick, and broke the demand zone, okay? So I'm going to take this out of the way, and we're going to look for that. In 7 minutes, we're going to look for that intersection, okay? Right down there, 2191, actually right about 2190 would be that sweet spot to get into. How's everybody doing? No, you covered a lot of ground, but I'm not doing a whole lot of trading either, okay? Like we're doing a lot of waiting at the moment. All right, so coming back out to our long setups, actually our short setups that we had, and we've had a couple that were short the prior day. Today, our stock picks that everybody should have gotten here. Let's see, enter a blank row and enter a label row. Okay, so I'm gonna type them in. I do have a couple of the short trades that we posted earlier. I'm going to come back into as we're expecting the markets to pull back. 0722. Okay, so the stock picks we sent out, these are all long, HNPZ. Oh, of course, I got that one wrong. HZPN. Let's try it again. H, Z, and P. There we go. But that one is already triggered. Now, as we're expecting the markets to move lower, okay, you may look to take some short-term profits on these. okay? Even right now, you see in that taking the trade long at 96.65, you're still up about 50, 60 cents on this, okay? Now, this is a pretty strong area where we could be looking for a breakout. And once price closes today above the prior candle, you would simply start to adjust your stop loss using the painted stops, okay? Next one, as far as the stock phase, let's see, HRI, ITT. I'm gonna come back, I'm just typing these in. LB, MS, RXN, and Square. Okay, so Square, okay, right there, 260.93. Looks like it did trigger. Again, I need to get better at putting these orders in ahead of time. But doing the class on top of that, I just have to work on, okay? We come up to our short trades. Let's take, I can set those up because not all of them have triggered yet. Okay, CMI, I can take trade short, 230.14, looking for a target at 220, okay? Now this is only good for about one more day, okay? And Kaitlyn and I have a nice little slide deck that we'll be putting up and posting in places. Well, it's Kaitlyn's slide deck. She did all the work, but I'm going to brag about it. We have some very specific rules and around trading using the entry point, and we do want to work on sharing those rules and helping you understand when the best opportunity is to participate in taking some of these. ARCB, again, the short trade, 52.45, trade selling short, 44.48 being the target. EAT, 53.66 going short, 46.39 target. SLGN, okay, that one's already underway. Not able to get into that one at the moment. And looking at this one, we could still participate in. Baxter, and we're always going to take the projected move and we're going to look left, okay? And as we look left, we want to see that picture on price chart. Even with shapes and patterns, we can see where the move out and the breakout happen, okay? So we're looking for that demand zone, and sometimes these little painted setup bars can be a nice little place to look for those demand zones, or at least be prepared when you're short to look for a profit target there, okay? So let's set up Baxter, see if we can get that one today. View, order bar. Baxter, we're going to do 100 shares. Don't have the largest account size, so we're just going to do a day order. But if it doesn't trigger today, I got to take it off the table. It's going to be a sell stop market. Sell stop is going to be 79.69. And we're going to place an OCO with an exit bracket. Single order short with an exit bracket, one limit, one stop. So my limit order is going to be 77.82. Stop market is going to be 81. Now you might be looking at going, man, that's a lot of risk, okay? Well, this is a different technique as we are using entry point. There are 32 different indicators on this: market trend, main trend, mid trend, and the trend strength. Right now, everything is level 5, okay? And we also have the painted stops starting to form, okay? When the painted stops are not forming, it's generally a little bit of more profit taking, okay? But as price starts to break down and we're anticipating the market to pull back a little bit, we could look for kind of a nice little gusher to the downside there. RPM, okay, RPM. We still have an opportunity to get into this one. Let's adjust our share size to 100. Sell stop market, 86.69, sell stop market. Single order short with an exit bracket, okay? Now, if this doesn't trigger today, it's off the table because it's been more than 3 days after the posting, okay? And some of the criteria that we'll present, you'll see when we take these trades off our radar screen and so on. So the limit move for profit, 83.25. Stop market order, okay, is 89.71. And for these, we're going to make good till cancel. And if the trade doesn't trigger today, then it's off the table and we'll cancel the whole setup, okay? All right, next one, RCB.
Hey, Jeff, after you're done, could we take a look at the Russell real quick?
I saw that there. What do you got on the Russell?
So that's Maddie's request. Are you looking at demand zone coming up? Because I see we broke that one level, so possibly I think price coming to our lower demand zone. But what's our strategy on that?
Well, price is already broke. We may get an opportunity as the markets are moving back up, and we kind of going into that bottom of the hour. We may get a bounce off of this one, okay? With the zones that we have plotted, 87% of the time, or 87 out of 100 trades, you could quite often get a one-to-one move, okay? But don't stay too long on this. I think we still, oh, I took the trade off there. Don't stay too long. Once price violates that distal line, you may get up to 2 to 3 opportunities to get out of break even. Once it's broken, take the opportunity to get out at break even, especially if you've had 2 or 3 times, okay, to exit that trade, okay? The next zone down below is still the 2190. We have 2 small zones right in that same area. And how we differentiate from this, we see the upper zone had the stronger move away from the proximal line, and we also see the lower zone had a smaller move away from the proximal. Lower zone is a proximal line entry at 2198, and the upper zone would be a zone entry, which would be bringing us back out into 2190. Between 2190 and 2198 is that sweet spot there. We also see that we have a down segment, up segment, and our zones are located in that sweet spot. Now's the time just to be patient and wait for it, okay? Did that help?
Yes, that was good. And one more question. Can we look at nat gas? Because I see that's coming up into our supply. Do you think we could take a breakout trade for that one?
Well, this one, we could take a breakout. You had what you want to, I'll stop sharing and you can bring up your chart if you want to revisit that.
Sure. All right, can you see my charts?
Yep, you're good.
Okay, cool. See, in nat gas, I was looking over this one with a student before as far as looking at this area where we see price has been used several times.
Mm-hmm.
And I know you mentioned the last trade date, but possibly getting a breakout first if we form a demand zone in here since this area has been all used up. Just looking to the left, we see all this supply used up. Now prices hit it again, pulled back, but looking in this area for potentially that leg base, and then we could take the breakout trade.
Oh, great. I kind of missed that one there. I like it. Now we're coming up to that, the announcement, and if we can we project above that area about 36 ticks?
Oh, that's true, yeah. And we do have a pending zone here. So, we always mention that we're looking for the breakout area, but also important to look for that pending zone to form just below. So here's our pending zone. Just got to see if we get the follow through on it.
Yeah, and one of the topics that I just haven't had time to cover this morning was the, when price breaks out of a breakout area. If it doesn't break out and go beyond a certain Fibonacci extension, often it can quickly be retraced. So what I'm kind of anticipating here is, as you pointed out, the breakout is that we get a small pop to the upside, and then we get that sell-off coming back down.
Yeah, and there's nothing really, there's nothing in the way. There's not much up that I'm seeing in the way as far as supply, and I know we're anticipating that 36 tick move, but I mean we've just been rallying. So.
And do you have a demand zone that you've also plotted out?
Yeah, so looking at that pending demand zone, so yeah, I'm seeing this is the breakout point, not much in the way. We'll need to see the follow through, and then this being our pending demand zone right now, since we haven't actually gotten the breakout portion yet.
I agree.
We'll see. The 36 ticks would give us the breakout. We just need to see if there's the follow through behind it.
Great observation. Thanks for pointing that out. We're about 8 minutes away from that announcement coming out. Let me bring up my charts again. And I need to, there we go. Yeah, let me bring up my chat again. All right, we also see in the NQ pop back up. Okay, now the NQ and natural gas have been pretty highly correlated. Okay, so that pop up on natural gas or breakout NQ may jump up into that 14,900, 14,935 range. Okay. Now, I certainly would like to see the NQ and others pull back a little bit. Just making sure that I'm also trading on my other screen, so I want to make sure that I have that opportunity to make some money as with you all, not just do the show or not making money. All right, let's come back here. We have gold, okay, getting a little pop up. And let's see, let me come back down, 120. 6 minutes away from the natural gas report, but also keeping an eye on gold, that it has used that area quite a bit, okay? And as we look for where we had the move out here, we can see that we had the 3-4 touches in this area where demand may have been and is possibly depleted at this point. And then we're looking for first stop on gold might be right. I'm kind of anticipating coming down and getting a nice big move. Okay. Now we are anticipating gold to go down over the next 2-3 days. Okay, into that last trade day. So a breakout may give us that catalyst to give that market volatility and that opportunity. Okay, so as we're on a 5-minute chart, lining up where we have that 36 tick move.
Order filled.
Oh, we just got RPM, our 100 shares. That was on the short side, wasn't it? And here comes Russell coming to us. Russell, I need to get that trade out there. I'm going to set that at 21.90. I'll come in one tick, 21.90 and 10 cents, okay? Now I'm going to put my protective stop all the way down at 84. The other side of both of these zones, 84.5. Okay, and I don't want to limit my upside. I want a good size bounce. The bounce back up to target, roughly looking at right around this range here, 2,204. Okay, 4 minutes away from the economic report. Okay, still looking on the Dow, still waiting. And come on, NASDAQ, push up into that area. And we can also see there's no time to short the NASDAQ yet because the equities are still moving higher. And the only one that's moving a little bit lower is Tesla. Okay, but we still have Amazon, Facebook, Google, all of those looking still strong to the upside. Okay. S&P dancing, chop, 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 chop. Okay. Internal, still showing some buying pressure coming in, more upticks and up volume. Okay, but the trend is high, so got to watch out for that. Okay, that's a negative divergence when using the trend at this point. As far as advancing issues over declining issues, we're on the bearish side of things, and the tick is possibly coming down to that sell program as it keeps in the lower part of this range. Okay. Let's see, hold on 1 second. Just make sure some of my other trades and stuff are in play. And let's come back over. We've got the natural gas. Let's get the drum roll. Breakout or breakdown? This is an overnight zone, so probably should break right through it. All right, who's flipping the coin? Up or down? Up or down? Maddie says yes. Good to have you in here, Maddie. Daniel says down, then up. Okay. What we got? This one's pretty fast, so if you do have a entry that you're looking for, and I'm looking, let's see, I'm gonna make sure I have the right, Q1. The Q contract still trading, okay, but the U contract is now getting about just as much volume, okay? Couple seconds here. There it goes. Yes. All right. Nice job. Nice call, Daniel. 870. I'm just chasing it at this point. Now we could look for that breakout. It did get just almost a 36 tick move, didn't it? Funny how that works. And we also have a zone that formed right up in that area too. Should we take the short at 39.13? And after all, in a little larger time frame, this would be a beautiful place for a topping pattern. I'll come back down. I think I'm going to take a poke at that. But if price starts to go too deep in the zone, I'll jump out of it there. 933 being the stop loss. All right. Let's take a look at our equity indexes. S&P coming back up to that supply. Equities kind of going flat. Goldman Sachs does look a little bearish. Nice little wedge or triangle forming right there. More or less a descending triangle. Tesla helping lead, now Google following. Watching the time of day. And really looking at this area as that opportunity to take a trade short. One more pop up on crude oil, getting up to 71.60 or 71.36 range would also be welcome.
Order filled.
They got filled on natural gas. I have $220 risk on this trade. As price drop down, pop back up, okay, into that supply. My risk is at 933, which is at 200. Now, I have the opportunity to take the breakout to the upside as well to recover from a possible loss, okay? So since the evidence is up here that the breakout is a possibility, number of touches and so on, as far as that supply area may have been depleted, is that we could look to take a trade going long at the same place that we're willing to get stopped out. So I'll sit that with, and then I would look up and get the same amount of ticks. So we're going from 910, we got about 30 ticks, about 22 ticks to the upside. So I'd look to recapture 22 ticks above the 33, which is going to put us right about that 55. Okay, so a breakout to the upside, I would be looking to just recover my potential drawdown. Okay. Now this might be one just like the crude oil that I want to be in for the next 3 to 4 days as price moves down. So I need a really big buffer on this to where I can adjust my stop loss. So if price gets down to that 38.70 area, I'll have that buffer where I can adjust my stop loss back down to where I entered the trade, taking my risk off the trade. Russell still hanging out. Dow's hanging out. NASDAQ going a little deeper into the zone. Facebook leading it. Apple, Microsoft, and Amazon, okay? So no time to go short just yet. We're still waiting on our bigger trades, okay? Okay, nice little profit here so far. I do need price to get further away before I adjust my stop loss, okay? Right now we're looking at almost a one-to-one move out of that area based on where I have my risk set, okay? All right, so looks like coming back to those, looks like Square just went off, okay? $260, oh, we're above that already. I missed it, damn it. Missed that one. $118.47. Buy stop market 118.47. Single order long with the bracket. Bracket is going to be good to cancel once I'm in that trade. I'll make that adjustment. So my limit move 128.92. Stop market 106.99. GTC on those. Day order if the trade triggers. 8 LB. Okay. Well, we've done a pretty good job of staying out of the chop, wouldn't you say? Have you guys done that today? Single order long with an exit bracket. Morgan Stanley. If the markets do go up, some of these may trigger. As long as I don't run out of money doing this. 96.12. Buy stop market. Single order long with an exit bracket. Target 104.57. Stop loss 88.97. Now, as I'm putting these trades on, this does not mean I will hold them to the target. Okay? Market conditions change, different things start to happen in the marketplace. So I want to be prepared to take profits, okay? When it comes to the stock market, 39% of your stocks move correlates with the equity indexes. That's why it was a little reserved going into any stocks right at the open. 41% of the stocks move is the sector and industry, okay? 80% of your stocks move has something to do with something else, okay? So we need to be paying close attention to that and be monitoring the markets, okay? Especially the equity index. All right, how are we doing on natural gas? Anybody make any money on that one? Looks like we got our one-to-one move. Oh, okay. Nice little pullback on that. We're up about 180 bucks. I'm still looking for more or less a 2-to-1 move before I adjust my stop loss down. Okay. In Q, getting deeper into zone. Awesome. Okay. Have a couple of open positions. Just need to make quick reference to. All right, indexes are moving higher. The price breaking below the, I'm going to say that 1791 on gold, we could be looking for about that 1762. Okay. Okay, we got a bull trap up here on the S&P.
Jeff, just a heads up, I don't want us to get caught off since we've gone over a little bit, but just in case we lose the Zoom group, we've gone over a little bit as far as time. Just a heads
Oh, thanks for reminding me. I'm just going along with the trading day, so
we're rolling.
I'm rolling here. Thanks for reminding. Yeah, our Zoom session may be ending here in the next 3 minutes. Thanks for reminding me of that. So I'll just go 2 more minutes here and then we'll jump out. Okay. All right. Let's see. Nothing on that. And crude oil. Boy, the P&L is what's really causing me to want to take the profit. Okay. Russell popping back up with the other equity indexes. We're still waiting. Dow, do you have that supply zone, 34,719. NASDAQ, we do have another zone just above the area that I have plotted on the large time frame, 14,900, 14,935. Okay. Still looking for that opportunity. May happen by the 11 a.m. Eastern when we start to see that next possible turning point. Okay. And the S&P 4364, 4367 area where we have the bull trap, we will be monitoring that as well. That's our daily our live trading session going on today. We got a lot of things coming out next week, a lot of new stuff that Kaitlyn and I are putting together, and we're moving forward. Okay, we've got some fantastic things that we'll announce. We have some emails and things like that to share with you and assemble on some classes that we have upcoming. That if you're willing to travel, you're more than welcome to come into the class. And not everything we do is going to be online, but we will be doing in some various locations some live classes. We'd love to have some of you come and join us. And we'll leave it at that. Okay. Anything you'd like to add, Kaitlyn, before we wrap up?
Yeah, just real quick, so everyone just keep an eye on the emails. I believe we'll be sending out some more today and this weekend, so just more updates coming as far as you guys, so stay on top of that. And then David also asked another good question as far as will your classes be recorded? Yes, they will be, so as long as you're subscribed, we're planning to upload our videos to our YouTube channel. That's going to be coming out in the near future as well, so yes, we do plan on having them be recorded and all in one place for you guys. So that's also coming, and a few more updates and classes, as Jeff mentioned, just so more to come. Just we'll keep you updated as we keep going.
And one last thing as we wrap up here. every time we tweet out something, if you would do us the courtesy of retweeting it, we'd like to get a lot of people into that 3-day where they can come in and preview what we do in the live trading room, kind of build our group up here. Okay. Thanks everybody for joining us. I'm sorry, go ahead.
And then Gallo also mentioned as far as where we're going to be going.
Right here.
Well, in center. So Florida, I believe we have, and then the DC class coming up.
Yeah, details will be coming up. Thanks everybody. Have a great day. Great job today, Kaitlyn. And let's make some of these zones work.
Thank you guys. See you all next week.